Okay, in this video, we're going to be talking about shifts in market structure, meaning how do we identify when something has made a switch or a switch in trend, in market structure from say a bearish market structure to a bullish market structure, or from a bullish market structure to a bearish market structure. How do we know when the trend has changed? How do we know when the market structure has changed? That's what we're going over here. So now, just imagine with me for a second, we'll go over some real charts here in a moment, but just imagine with me for a second that this is a price chart, all right? What's it doing? It's consistently making new lows, consistently making higher or lower highs, okay? Now, so that's bearish market structure, all right? So that's, now the first thing that you want to see for that switch from bearish to bullish, the first thing you want to see is a shift, okay? So what do I mean when I say a shift? So what we got right here, if you look at my cursor, that is a lower high. That's a lower high. That's a short-term high right there that was formed before we had that break of that new low. So here's what we're going to do. We're going to mark it so it stands out. And what you want to see for the step number one, this is like step number one that you want to see to confirm that change in trend, that change in market structure. You want to see price rally up and break that. You want to see it rally up and break that short-term high, okay? That is what we call a shift in structure, shift in market structure, okay? It broke that previous lower high to the upside like that. That is what you call a shift in structure. Next, what you want to see is you want to see price retrace lower back into a discount, okay? And what you want to see after price retraces, what you want to see formed after it breaks is a new low. You want to see a higher low form, because remember what we said in the previous video? What is the criteria for something that's operating in a bullish market structure? It's consistently putting in higher lows. It's consistently breaking new highs, okay? This was that igniting move. That was that igniting move. That was that impulse move from the low that broke your high. That's step number one. Step number two, you want to see it retrace back within that new range, that new price range that was created on that impulse move higher. Step number three, you want to see a new low formed, aka, when I say new low, a swing low, which is just when you get your lowest low in the middle, two higher lows on the left and right, which we'll go over here in a second on a real price chart after I get done with this illustration. So it puts in a low, and the final confirmation to play it 100% safe. Now, in all honesty, a lot of times I don't wait for that last confirmation. Really, all I need to see is that swing level put in. But if you want to play it really safe, what you're going to do is you're going to wait for the third candle of the price swing. Again, I know you might be kind of lost right now. It'll make sense in a second when I go to a real price chart. But then you want to see that third candle of that price swing taken out, and then you want to see it start to resume up higher, okay? That is that confirmation. Again, we want to see, you can see we're operating within a bearish market structure, consistently making new lows. It was putting in lower highs consistently, making new lows, and then boom, you get a nice big impulse move. You get that igniting move that breaks that short-term high, that previous short-term high. You want to see that igniting move, and then you want to see retracement back within that range, and then after you get that retracement, you want to see a new swing level form, aka your higher low form. And then once it does that and it starts making its way up higher, you have confirmation that price is now operating within a bullish market structure. So that is the criteria. That is the switch that it makes from a bearish to a bullish market structure. And then from bullish to bearish, it's just the opposite of this. You just flip it around. So like price is consistently making its way up higher, consistently making its way up higher, consistently making its way up higher, and then boom, it makes that shift in structure right there. See that? There's your shift, and then it retraces back up within that range, puts in your new lower high like that, and then it continues its way lower, okay? So it's just the opposite of that, okay? Now let's go to a real price chart. All right, so now we're looking at a weekly chart of Euro USD right here. Again, I just go to I'm using the weekly chart because it's a lot. These higher time frames are definitely much cleaner to look at. It's just much cleaner price action, less choppy. So we're looking at a weekly chart of Euro USD right here. So like we talked about in the previous video, I believe we went over this briefly. So this is when it was kind of operating within a bearish market structure right here. If you look at my cursor, see how it's consistently trending lower, taking out new lows. It's putting in consistent lower highs right here, like lower high, lower high, lower high. It keeps tagging the sell stops, keeps tagging these sell stops. So what do we need for that shift in structure? What do we need? We need to see price break a short-term high. That is, you want to see it break a previous high. That's step number one. That happened right here. See this? If you look at my cursor. Now, what is the criteria for a short-term high that I'm talking about? It's simply, so when we're talking about going from a bearish market structure to a bullish market structure, a swing high level is just when you got your highest high in the middle and two lower highs in the left and the right. Again, highest high in the middle, we're going by the absolute high of the candle, not the body. The absolute high that was traded on that candle, you want to see in the middle, the highest, and then you want to see a lower high on the left and the right. That's what we constitute as a swing high level, okay? And what you want to see is, like we went over on the drawing board just a second ago, you want to see price come up, break that swing high level. That's step number one that we were talking about. That's our shift in market structure. That is a shift in market structure right there. Look at my cursor. Look at when price came up, it purged that level. What's resting above that level? Buy stops, buy side liquidity. So it purges that level and boom, we got that shift in momentum. We got that shift in market structure. But that's not it. We need a couple more things to play out here for that confirmation. That's our shift, but it's not 100%. We don't have that change yet. We don't have that 100% change yet. That's just a shift. That's that igniting move, okay? What do we want to see next? We want to see a swing low put in. A swing low put in. Now, what is a swing low? A swing low is just the opposite of that swing high that I just broke down for you. Lowest low in the middle, which is right here. See, that was the absolute low that it traded right there. And then you got a higher low on the left. And then you got a higher low on the right. That is what a swing low is. You want to see that formed after your shift in structure. Shift, swing low. Okay, and now the final confirmation is you want to see the high of that third candle. You want to see the buy stops, because remember, above that high, we got buy stops resting there. You want to see that purge out of the marketplace, which happens right here. See that? Let me just plot it on here real quick for you, just to make sure we're on the same page. The high of that third candle opens up, this candle right here. It opens up right here, and then boom, it purges above it. That's your confirmation. That's 100% switch in market structure, 100% change in direction. That's what you want. Now, again, many times I don't wait for that last one. That's just if you want to play it really safe. That's like for that 100% confirmation. But a lot of times I will. I'll get in, or I'll play stuff even if I just get that swing low put in, for me personally, because the vast majority of the times, in my experience, that's all you need is that swing low after the shift. But that's if you just want 100%. You want to see the third. You want to see the high of that third candle taken. Okay, and we're going to go over a switch to the bearish side here as well, just to kind of complete that, even though it's really just the exact opposite. So here we go. Let's just look at this right here, because we can see we had this really large move up right here. Consistently look at my cursor, consistently grinding up, consistently grinding up, consistently grinding up. And so we came down and we put in what right here? See that swing low level? You look at my cursor. Again, this was operating within a bullish market structure. It was consistently grinding up, It pulled back right here. That's where it pulled back, and then it made a little move up, and boom, we took out that low. That's that shift. Now, it wasn't a very strong shift in structure, but still, it broke that low. Let me plot it on the chart for you real quick so we're on the same page here. And then, boom. Again, look at my cursor. There's that low. Lowest low in the middle. And then we got a higher low on the left. We got a higher low on the right. Swing low. Boom. Broke that swing low. Shift in structure. That's step number one. What's step number two? We need a swing high put in. So then price does what? It trades higher. That's what we want to see. We want to see it trade back up after it takes out that low, back within that range, and we want to see a swing high put in. It does it right here. See that? So we got your highest high in the middle, and then you got a lower high on the left and the right. Boom. We get our swing high put in. And then did we take out the low of the third candle? We sure did. Look right there. Let me plot it on there for you real quick so you can see it. That's confirmation. That's 100% switch in market structure right there. Okay. And then we took out the low, and then we traded lower, and then we continued to tag the lows, continue to tag the sell side liquidity underneath each of those weeks. Okay. Then you can see it kind of curled back up right here. It did temporarily break that high right there. So that could have been a possible switch back to the upside, possibly, but did it put in that swing low? Nope, it didn't. It came back down and then broke this swing low right here. So that was back to the shift to the downside. And then what do we need to see? We need to see a swing high put in, puts in a swing high, and then it continues lower, 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 and just got destroyed for a while. Okay.